Hey, welcome back to The Dive. Today on the show, we have the great Rick Rule joining us. He's going to share his insights on the banking crisis, the Trudeau Foundation scandal, the US dollar possibly losing its dominant currency status, gold, and be sure to stick around to the end to hear what commodities Rick sees with the most potential this year. Hey, Rick, welcome back to The Dive. How are you?
Cassandra, a pleasure to be back. Thank you for having me back on.
We're so happy to have you, Rick. Okay, so Rick, investors are eyeing bank earnings this week. Do you think that the banking crisis is over?
I do not think the banking crisis is over, but I think that investors and savers, for that matter, need to segregate between banks that have operated prudently, and you and I have talked about this in the past, and those that haven't. Banking is actually a very good business, one that I've been involved in for 30, 35 years. In fact, I frequently describe myself as a used money salesman. The idea that you can affect a credit spread without affecting a time spread, which is to say lending long and borrowing short, is a very, very good business if you are prudent. It is a better business in the United States and Canada, where there is an implicit subsidy from federal deposit insurance, which means that a reasonable saver, in effect, isn't loaning to the bank, but rather is loaning to the government by way of deposit insurance. So it's a very, very, very good business. And it's a business that if you're really reasonably prudent, you don't need to screw up. Unfortunately, many banks aren't particularly prudent. I think, by the way, that bank earnings, particularly for Canadian banks, may surprise investors to the upside. The operating environment for banks that we are in the last 3 months, particularly for big banks, has been very good. And I think that the Canadian banking oligopoly, the fact that there are very few banks in Canada, a market share which has traditionally been supported by your government, means that the markdowns that are shaking the US banking industry should be, and probably will be, less severe in Canada.
Which banks do you think in today's environment would be safe for a depositor?
I think for a Canadian depositor, it's a very simple measure of looking at capital adequacy, which is to say those banks that maintain large equity slices relative to their total assets. Traditionally, the strongest bank in Canada has been the Royal Bank of Canada, which isn't to say it's enjoyed the highest return on assets, but because it's been under-leveraged, it's probably been the strongest and safest bank in Canada. But the truth is that while Canadian banking legislation means that Canadian depositors and Canadian borrowers are more poorly served by a less competitive industry, investors are generally better served by a less competitive industry. And I would suggest that deposits and frankly, credit security in any of the Canadian banks is probably in pretty good shape. That isn't to say in a recession that some Canadian banks wouldn't experience intermittent difficulty with credit quality and have some write-downs. What it does mean is that the average Canadian depositor, although he or she will receive less deposit interest rates, will receive it from more solvent institutions than U.S. depositors. For your U.S. listeners, here's a couple of hints. The bank is forced to provide to you on request a statement of financial condition. They don't volunteer it, but they are required to forward it to you if you request it. In the statement of financial condition, you can dive as deeply as you want into the bank's financials. So the first thing that you look at is capital adequacy, the amount of equity relative to total assets on the bank's balance sheet. The FDIC considers 7% equity to total assets to be a reasonable slice. I personally prefer 10. I'd like to be a little more conservative than the bank regulators. The second ratio that one looks at is a bit trickier, and you need to go back in time. That is, look at the bank's provision for loan losses relative to the bank's experience for loan losses. If you have banks that have been traditionally under-provisioned for loan losses, you have banks that are managing earnings to the upside and trying to be more aggressive than they otherwise should. If you have, by contrast, a 5 or 10-year experience where banks are over-reserved for loan loss, what that means is that you have a conservatively run bank. The third thing to look at, particularly today for your U.S. listeners, is the ratio of cash and cash equivalents that the bank has on hand relative to their demand and now deposits. That is, their ability to withstand a temporary run on the bank. By looking at those three ratios, and perhaps looking too at the duration risk, which is to say the median duration of the bank's assets relative to the duration of the liabilities, determining whether the bank is lending long, but funding that long-dated paper with short-term funding sources, that can be very, very dangerous. And it isn't something that a bank should do, but it is something that many banks do. Sorry for that long-winded answer, but I think it's a really critical question in today's climate, particularly if we head into a recession where the problems that some banks are experiencing today would be magnified.
Okay, so Rick, this week we saw the resignation of the board of directors and the CEO of the Pierre Elliott Trudeau Foundation in relation to pressures from the Chinese interference scandal. Do you think the media has downplayed this story? And if more comes out, do you think that Trudeau will be able to skate through it?
I think Trudeau will be able to skate through it fine. Remember that what I call the consolidated left, the Liberals, the NDP, the Bloc Québécois, and the Greens, characteristically command over 60% of the vote. And Trudeau, for whatever his faults are for Canada, is the best vote getter that the consolidated left have. The Greens couldn't elect a PM. The NDP couldn't elect a PM, particularly when they're trying to elect. And the Bloc Québécois couldn't elect a PM outside of Quebec either. So irrespective of how the big thinkers might think about the Trudeau Foundation, the truth is that the consolidated left is sadly alive and well in Canada, and the kingmakers of the consolidated left understand that their key to the kingdom, their key to power, is the vote-getting capabilities of Justin Trudeau in Ontario, Quebec, and of course in the lower mainland of BC. It remains to be seen how the impact of the alleged influence buying by the PRC, both in terms of the PRC's alleged interference in elections in Canada and also their very large donations or alleged donations to the Trudeau Foundation, play out among Canadian voters. That's a very, very different circumstance. It may be that if Mr. Trudeau begins to experience difficulties in the ridings, that the constituents of the consolidated left jockey for more power within the consolidated left, which is to say, the NDP might decide that their part of the bargain would be more cabinet seats or something that the Liberals considered to be untenable. If you began to see cracks in the voting bloc or cracks among the political agreements between the consolidated left, then it's possible that you could see a conservative minority government.
Okay. So, Rick, the US dollar has been the dominant currency in international trade for decades. However, recently we're seeing trade in oil and LNG using different currencies. Do you think that this is a big deal, or do you think it's just clickbait for de-dollarization alarmists?
I think in the longer term, it's a big deal. I think in the very near term, there is no currency or block of currencies in the world that is as liquid and as transparent as the US dollar. I remember many years ago when it was suggested that the euro might replace the US dollar. And I remember very well my friend Doug Casey saying the dollar is an I owe you nothing. The euro is a who owes you nothing. Imagine a basket of currencies that is promulgated by one fairly strong economy, which is to say China, and a coalition of basket cases. Imagine a common currency that includes such fiscal stalwarts as Argentina and South Africa. This is a true non-starter. Now, the United States needs to be very cautious of further debasement of the U.S. currency. I would suggest to you, Cassandra, that the enemy of the U.S. dollar is not China. It's not Russia. It's not Saudi Arabia. It's not Iran. It's the U.S. Congress. The idea that you debase the debt instruments of the U.S. dollar, which is to say the financial products, by artificially low interest rates and by poor credit quality, and then you further debase the currency by weaponizing the SWIFT banking system and by weaponizing transactions in U.S. dollars, using the dollar to export U.S. values and U.S. political power over other countries. This is insanity. It's true insanity. The United States enjoys what de Gaulle called the exorbitant privilege of being able to have the world's currency, stimulating demand in other countries, artificial demand for U.S. dollars because their debt and their trade were denominated in dollars. This is, in fact, an exorbitant privilege. Every American benefits to the detriment of people all around the rest of the world this privilege, which is the U.S. dollar as a reserve currency. And the U.S. Congress and the U.S. executive is doing their very best for near-term political purposes to deprive American citizens of this exorbitant privilege. Truly insane.
Do you think that we're going to see a new global currency anytime soon?
I think we'll see a more multipolar world. I think, too, that you will see bilateral trade in currencies other than the US dollar, particularly the Chinese yuan. But the yuan is a currency that is the reflection of an extremely insular economy. There is no transparency into Chinese capital markets, and there's only limited convertibility. When I was active trying to sell Sprott investment products to sovereign wealth funds around the world, I had the ability personally to talk to some of the managers of the largest sovereign wealth funds in the world. And I asked them about the US dollar and US treasuries relative to other sovereign debt. And I remember very well an Asian sovereign wealth fund manager, when I asked him if they trusted us, he said, "Oh, no, but we trust you much more than we trust each other." When I mentioned that buying US treasuries for a yield lower than the inflation rate in the US dollar had the feeling to me to be a lie, the same man answered to me, "Ah, yes, a lie to be sure, but a much deeper and more liquid lie than we tell each other." So I suspect, again, to quote Doug Casey, that the dollar will continue to be, quote, the prettiest mare at the slaughterhouse.
Okay, so let's move on and talk about gold. Central banks bought 400 tons in Q3 last year. These are numbers that we haven't seen since the 80s. Obviously, there's theories that Russia and China are the big buyers here. What are your thoughts on the continuous buying of gold by central banks?
Well, personally, I think it's a bad thing in the sense that I'm anti-government. And so any government that does anything that's smart, that's advantageous, I think is a bad thing because I'd like to see them all perish in penury. But moving on beyond personal prejudice, I think that we've left them no choice, we meaning the United States. If we sell them a US 10-year treasury, we pay them 340 basis points in a currency that we acknowledge we're debasing at 700 basis points a year. In other words, we guarantee the Chinese and the Russians a loss in purchasing power. We absolutely, positively guarantee that they will be able to buy less stuff with their savings than would otherwise be the case. Now, for once in their lives, they believe us, and for good reason. They also don't trust each other. When you look at these central banks, if they are unwilling to hold US treasuries, why on earth would they hold Russian treasuries? Why would they hold Argentine treasuries after 8 defaults in 100 years? We have left them no choice but to buy gold. The third thing, of course, is that foreign central banks have come to understand that various currency blocks are competing to weaponize their currency. While they may or may not be able to transact in US dollars, depending on the whim of the US government, they can always transact in gold. So I think it's fair to say that there's a decrease in trust around the world. Gold has always done well when there's a decrease in trust. It's a financial asset that isn't simultaneously a liability. It isn't a promise to pay like a bond. It's payment in and of itself. And I think the increasing appetite for gold among central banks is simply a reflection of the changing economic times that all of us are living in.
How important is the $2,000 price level for gold?
I think psychologically it's important, but remember that increasingly gold is traded and denominated in a whole bunch of currencies around the world. I wonder, as an example, as a Canadian, why you would care as much about the US dollar quote than the Canadian dollar quote, where it eclipsed $2,000 some time ago. I think that $2,000, if it proves to be a support level, may be an important psychological support level in the United States. But I don't think that psychological support is as important as the arithmetic around owning gold relative to other savings and investment instruments, which I think is much more important.
What is your preferred way to get exposure to the gold market?
I think that depends on who you are. For an old guy like myself, physical gold represents an insurance policy. Physical gold has stood people well in times when there were stresses on the economy and there were problems with regards to other savings and investment instruments. Let's do the arithmetic around that fear one more time. As an American, well, frankly, as a citizen in any country of the world, the premier security in the world, this premier savings instrument around the world, the one that other instruments are ultimately priced off of, is the US 10-year Treasury. People around the world don't like to have that, but it has the disadvantage of being true. So let's look at the arithmetic around the US 10-year Treasury, or let's re-look at it. You give the US government money to use for 10 years, and they pay you 3.4%, 340 basis points, in a currency that the Congressional Budget Office, not some cranky old libertarian named Rick Rule, the Congressional Budget Office suggests is depreciating in terms of utility by 7% a year. In other words, the US government solemnly promises to reduce your purchasing power by 3.5% a year for 10 years. We've described that on your show before as return-free risk. Gold is competing with return-free risk. So I personally have transferred a relatively large amount of liquidity out of US short-term treasuries and other deposit instruments into physical gold, not really in the hope of making money, but rather in the hope of not losing purchasing power. As a saver, you want to own gold. As an investor, you want to own the biggest and the best gold equities in the world. They are reasonably cheap relative to the price of gold. You don't invest across the waterfront in the gold stocks. You buy the biggest and the best gold stocks that you can as an investor. If you are willing to do the work and take the risk to be a speculator, then you come into the intermediate gold stocks and the junior gold stocks. But understand, you have to contend with volatility and you have to contend with risk. And importantly, you have to do the work to put your portfolio in the context of that old spaghetti Western, the good, the bad, and the ugly. So I really think the answer to your question depends on who you are as an investor, what your appetite for risk is, what your appetite for volatility is, and what your appetite for work is. Sorry for that long-winded answer, but it's a failing that I see in thousands of people who come to me for portfolio grading.
Do you think that we could see an all-time high for gold this year?
I think we will see an all-time nominal high. Remember, when you say an all-time high, when you're talking about 2,000 US dollars, you are talking about a currency that's lost 96% of its purchasing power in 100 years. So you have to talk about nominal values and real values. If we were going to see an all-time high in gold, you need to remember that the dollar has lost a substantial amount of its purchasing power. So I suspect that an all-time high in gold would need to see the gold price in the $3,800 with a $3,800 handle in nominal terms.
Okay, so Rick, which commodity do you think has the most potential this year?
I still think uranium has the most potential this year. Close second, very close second, would be natural gas. The natural gas's price has fallen like a boulder off a bridge, from stupidly overpriced on Russian fears to stupidly underpriced because of byproduct gas production, mostly in West Texas. And I think that gas normalizes, and I think it normalizes this year.
Well, Rick, that's all we have for you today. But before we let you go, could you please let our audience know where they can go to hear more of your commentary?
Yeah, absolutely. And I'll give them an incentive. The best way to get in touch with me is Rule Investment Media. If you like my discussions on the economy and natural resources, I'll give you an incentive to do more. If you go to Rule Investment Media and list your natural resource stocks, please no crypto, please no pot stocks, please no tech stocks, I'll personally rank your portfolio 1 to 10, 1 being best, 10 being worst. And I will make comments on individual issues if I think my comments have value. By the way, Cassandra, as you know, my interest in banking is real. I'm part of starting a new bank, Battle Bank, a bank that will be particularly of interest to people who want to do business with an old-fashioned bank, one that has money in it. Also, somebody who might want to do business with a bank that lends against precious metals holding, what I consider to be very good security, but what some other banks consider to be age-old anachronisms. Anybody who cares about what I'm doing in banking at Rule Investment Media under the question and comment section can simply write in bank, and we will put you on the list of people to keep you informed about our bank when it gets its charter. Thank you, Cassandra, for the opportunity to avail more people of information around Battle Bank.
Of course. We really appreciate you coming on, Rick. Thank you so much, and we'll see you again soon, hopefully.
Always a pleasure. Thank you.
Thank you so much for tuning in today. We will be back again tomorrow with the latest news, so be sure to stay tuned by hitting that notification bell and subscribing below before you leave us. Bye.